Can you send the link again?
Assalamu alaikum. I'm just doing a very quick audio check to make sure you can hear me and I can hear others.
Ji, Assalamualaikum. Shubsher Sab, I can hear you.
Assalamu alaikum, everybody. This is Shabano.
Walaikum salam, Shaban. Thank you for conducting this webinar. We really
Absolutely, my pleasure. Thank you.
So I think we should wait for maybe 5 more minutes for more people to join, and then I will leave it up to you, to your discretion when you want to start.
Absolutely. Okay.
Assalamu everyone.
जी वालेकुम सलाम।
How's it going? Waiting for the decisions on the license?
Sorry, Noreen, can you repeat yourself? I wasn't able to hear you.
Oh, no worries. I was just asking you, how is it going with you guys? Waiting on the decisions?
Always waiting. It's all gossip all around and always waiting. I have stopped consuming any information, any news from any channel, and I just reply everyone that when it will come, we'll see what it is about.
Yes. Well, I think we're very close to the finish line now. Should be exciting.
No one knows. It's Pakistan. Hey Shabano, how are you? Faraz, Assalamu alaikum, how are you?
Assalamualaikum
Walaikum
ji.
salam, Naman.
Assalamualaikum.
Assalamu alaikum.
Assalamu alaikum, Naman, Faraz, Bano,
Assalamu alaikum.
जी
Noreen.
अस्सलाम वालेकुम।
Assalamu alaikum.
So Noreen, how's your new partnership going?
Very exciting. This is my first acquisition. So, a lot to learn, a very exciting experience. New things
Right.
coming in. So yeah, it's going well. Shukr alhamdulillah.
Very good, mashallah.
Who are we waiting on for, Shabano?
So we're just waiting for more participants to join, but we'll start at 3:05. Just 2 more minutes and we'll start then.
Sounds good.
Thank you, Shabano. I think all our panelists are here, and we have a few attendees also. So
Great.
if you wish, we can start, or if you want, we
Let's
can
start. Yes, absolutely.
Yeah.
And just before, starting, I'll just let all the participants, panelists know that we're going to try and wrap it up before 2 hours, hopefully like around 4:30. So rest assured, you'll have your evenings free. Guys, I think this is a really important topic. All of us have been working in some capacity or the other for a period of time in this space, whether it's digital banking, whether it's financial inclusion. This is something very close to my heart. I've just introducing myself, Shabano Hamid. I am heading Prosper Technology. It's a fintech that we have launched under Planet N group of companies. It's an open banking platform, very exciting, makes me wonder, why was I doing a 9-to-5 job, before 6 months, because this is something that I really enjoy doing. And the kind of challenges that we have, honestly, every day, they're nothing in terms of the opportunity that lies ahead, which is the real part, which is why we're all here. So I would start the discussion by all of you, just, all the panelists, you can give your introduction, and then we can have a small, like a background, and then we'll go into the questions. I have some interesting questions, most of them, and please feel free to, ask me or other panelists if you like as well. Something that it's in your mind, it's something that you would like to inquire more about. So we'll start with Noreen. Let's start with you, and then all the panelists can go one after the other. A little introduction about yourself.
Thank you, Shabanu. Hi, guys. I'm Noreen Hayat. Well, now CEO of ZoodPay, technically still Pays Financial Services. And I have been in the field of digital lending for the past few years now. And yeah, aspirations to see how that leads us to digital banking. But yeah, that's a little about me.
Great.
Shall I start? So my name is Faraz Amjad. I'm based in London. I'm a fintech consultant. I work with companies like VentureDive in Pakistan. I represent them in the UK and Europe. And I've been in the banking and payment space since 2009.
Fascinating. I'm happy to go next. It's a pleasure to meet you guys. My name is Mehmood. I represent Alif in Pakistan. We're one of the aspiring applicants for a digital banking license. Alif itself comes from Tajikistan and Uzbekistan, where they've done amazingly well within the digital lending and digital banking space. I come from a world of consulting and microfinance in my history. So that's it.
I'm the last one, so I think I should go now. So my name is Noman Azhar. I'm the chief officer and founder of Zindagi. Previously, I've been associated with the telecom sector, digital financial services, banking sector, remained CDO and CIO of JS Bank as well. Currently parked under JS Bank as a separate within organization placed to become obviously a separate organization. We already launched Zindagi this year, January 18th. There with the completion of first year with a lot of achievements, and my major contribution has been towards financial services industry and developing the ecosystem across branchless digital and banking sector.
Great. Thank you so much for the introduction. I feel like this is going to be a very productive and insightful session, given all of your backgrounds. So I'll just start with something which is a little bit, something to think about. I feel like over the past decade or so, I think financial services as well as financial service providers, have taken advantage of the disruptive technology as well as regulatory changes, because we've seen in Pakistan as well, State Bank is, we can say a lot about it, but they're open to new ideas. And if something makes sense, they really do put their heart and soul into making it work. I saw that at EasyPaisa as well. A lot of new banking business models have potentially also made it easier to deliver financial services to the unbanked. However, I think despite these developments, most traditional banks have continuously ignored the need for digital banking, the way that it's in essence it should be. We can discuss why, what is stopping them, and we'll talk about that, especially in a country like Pakistan, where there are a lot of underserved customers. What is it that we need to do? That's a question mark. We'll talk about that. Many assume, I think also, I've spoken to a lot of banks, they assume that these customers are not profitable. Yeah, we can give them services, we can give them a lot of products, but what is in it for us? What do we do? That's a very viable question. Everybody's here to make money. And I honestly feel that the evidence is to the contrary. These people can make a lot of money for banks, but what generally bankers assume is that this is not a segment that's something we would like to wholly solely commit to. So this is a little bit background to it. And we'll start, I think it's great to, if somebody wants to add into this, great, but I have, I'll start with the questions because I feel we have so much knowledge to share. And I'll start with Faraz, to be honest, because I think that, having a holistic view as being a consultant, also sitting, looking after more developed countries, being in Europe, what do you think, to start off with, what do you think are the most effective techniques to drive digital transformation in a bank? What is it that we need to get the ball rolling? That's really the question.
Yeah. So in terms of banks, generally, if you I mean, it's difficult to compare banks from this region to Pakistan. But in terms of consumer banking, you would say a lot of digital banks that have rolled out their services in UK and Europe have given a tough time to the conventional banks. And that has actually led to the more conventional and large banks turn towards digital transformation because, frankly, they have lost a lot of customers over the past 3-4 years to digital challenges. And that, of course, is one of the key factors where, bigger banks are pushing for more digital transformation in terms of retail banking. When it comes to business banking, again, the scenario is the same. SME is a major sector in the UK. Probably, 90% of the market is SME in business. And transformation for business banking also has taken up quite a space by challengers like Tide, Monies, and other digital challenger banks. And this is one of the key reasons why most of the bigger banks are pushing for major transformation on their digital side, digital channels as well. But there are challenges for conventional banks when they talk about moving from legacy to, let's say, newer systems, because it's more time taking, time to market is much longer, investment is much higher. But the cost benefits for bigger banks are, of course, correspondingly big when they move into the digital space. Still, banks in UK and Europe, they're struggling on the digital side versus challengers, and the reason is complexity of change. That's my 2 cents on it.
So Shivano, I would like to add something if you allow.
Please. Yes.
Yeah. I'm kind of in a unique position where I have been asked to serve as CIO of a bank, full commercial bank, CDO of a full commercial bank, and then kind of the bank altogether from ground up. Faraz has rightly mentioned, and I would like to kind of second with few examples for the audience to better understand it. When you have an organization which is, for example, not as old as 75, though we do have banks in Pakistan which are 75 years old, but when I became CIO for JS Bank, it was like 15 years old organization. You do have an organization which has obviously been there for 15 years, working in one way. One of the biggest challenge to when you try to kind of transform an existing organization into a digital organization, biggest challenge is human behavior. People are used to of working in one way. When you build something new, you can design it the way you want. You can add people knowing the skills required to go on with. But when you already have a 4,000, 5,000 people organization working with, working on something which is working well for them. It's not that they are, obviously we do have this kind of discussion a lot that how big is the chunk and how much is banks. But as far as banks are concerned, they are making hefty profits and they are as good as anything else. So they don't really feel the need to get into it. However, it becomes impossible, nearly impossible for any existing organization to change, to bring that change, not only because it is not immediately cost. It has an ROI, obviously, but it doesn't show any ROI immediately. Deploying technologies is not cheap. 2,
the human behavior is one of the biggest obstacles while you are going towards digital transformation. So eventually what you, or as I think as an industry, what we have figured out, or at least as JS Group, what we have figured out is, rather than, obviously we do need some digital interventions on the conventional banking side, but it is always better to build something from scratch for the target market that we want them separately, rather than trying to target everyone from your commercial conventional bank and trying to digitize it. It is very difficult for us to actually get into that domain.
No, absolutely. You've spoken about, Noman, about ROI. This is something that I keep on thinking about as well. And a lot of people ask this, what is the ROI for digital transformation? And I keep saying, what is the ROI for the entire account opening process that you do on a piece of paper? I mean, it is, organizations I see are, now should be thinking about a leap of faith when it comes to digital banking. And that's very closely tied into what you said about the human behavior. Unless you have that faith, the top leadership or the organization, that this will work, this has to work. It's just the natural evolution. We cannot do away with digital banking. There's not going to be much talk about it. So I think you've touched the right topic. Completely agree with that. Noreen, I think you've started this the whole journey of microloan, insurance, other digital products. Very interesting. When nobody was really talking about it. I think being in there and seeing at the grassroots level is something that we would love to hear about. So, what has been your high points, successes, and what are the real learnings from starting and implementing products, being in Tez from day one? We would love to hear that.
Well, it's been quite an enlightening journey, it's actually going to be useful to lay some perspective on the background. We actually started, with our core embedded in microfinance, which was fee-level microfinance. And, these are people who operate at the grassroots level. When microfinance organizations came into being, digital wasn't a thing at all. So, we've actually seen the behaviors of consumers at the grassroots and their interaction with financial services at the grassroots. When they started, the vision was really to be a full stack neobank, where, we were thinking of launching credit, savings, insurance, investments, just transcending that consumer, through that entire journey, hooking through credit. And, when we actually started off, credit itself was such a mammoth animal to deal with that it took actually, all of our bandwidth. And I think some of the core learnings that we got out of at least Tez's journey was to have a very focused organizational approach. And while we did end up introducing a couple of other products as well, the core and the flagship was always credit, because what we understood was that the need of the masses is actually access to liquidity, which even still exists. Banks are not easily providing credit to the masses. Even MFIs only serving a very particular niche. And now we do have some fintechs operating, but they're just barely scratching the surface. I think for us, the most important takeaway was just being euphoric about the customer journey. And while the product was very important, you have multiple products that are similar. You can have UI, UX that can be very similar for multiple apps. But the journey right from the point of acquisition till post recovery, everything that there and in between matters a lot. And it's not only high tech; it has to be a balance between high tech and high touch. And I think that's something that was very important. We created our own credit scoring systems, and we had our own business rules engine. While that helped us in the initial decisioning for serving someone, there was so much more in the middle of it that we couldn't have missed. For example, our customer support team, our call center, how their interaction with the consumers. If there was an experience that the consumer, even a good consumer faced that was bad, we saw a few good consumers turning rogue and defaulting. So that's how important, we feel customer journey is when it comes to digital. And when you talk about the masses in Pakistan, it's very important to understand that digital lending is still very nascent. Well, digital itself is very nascent in Pakistan. So that element of literacy and hand holding is so important. We talk about, digital transformation kare. Har cheez digital karte hain. You can't expect that over even a few years for an economy and a mindset like Pakistan. A lot more goes into it. So I think that was something that we took away from Tez's journey.
No, I think that's really what you said is bang on target, because hand holding is super important at this point in time, because this is still relatively new, and you said it, there's no magic formula. But if we say there is a magic formula, so this is a question that I was once asked by a CEO group head of Telenor in Norway. He said, you guys have 220 million population, and like I would say 100 million people have phones. What is that one thing that's stopping people to adopt digital accounts? For example, digital banking. I mean, EasyPaisa, 10 million and odd customers. Jazz, again, 10 to 15 million. Between both of them and Ufone and Zong, it should be 25 million. So if you have to put it in one line, what is that magic formula that will make us comparable to, okay, India is a much larger population, it's a much larger playing field, but we see a lot of success in India. We see a lot of success in Kenya. The markets are more or less similar. Yeah, regulatory platforms are different. But what is that magic that will lead us to grow from 25 million digital accounts to 100 million? So we'll start with you, and then everybody can answer this one question. Yeah.
I wish we all knew that answer, because if we did, we would have been somewhere else this fast. But, I think we all talk about this very often. And, while we know what it is, execution is still not that easy, because the environment is not completely ready for it. I feel it's value, the value that you bring to the consumer, and I'll just give an example. For example, when we started Tez, we were dispersing loans into mobile wallets. And of course, that wasn't our mobile wallet. We had integrated with all the mobile wallet providers. And initially, in the first two cohorts, 70% of the borrowers who came to us, they did not have a bank account before that. They literally created those bank accounts just to, take that loan. So, as long as a customer sees value in what's being offered, they will actually learn that journey also. And they'll adopt it as well. So it's really how easy that adoption is, and how that value is embedded into that day-to-day life. So yeah, I think while it sounds easy, it's not an easy thing to do. You need to replace their day-to-day requirements with the digital requirements. So I think if you can just embed that into their day-to-day journey seamlessly, I think that in itself, would change the way banking is done. But yeah, it's not as easy as it sounds.
Yeah, like Nadeem Saab says, true digital banking will come when I can pay for my 2 Kinus or Maltas from the Thelewala through my app. Yeah, that's really it is. What do you think, Faraz, about this?
I'm sorry, if I may jump in, Sherbano.
Please.
Sorry,
please.
Faraz, I didn't mean to interrupt you before you went, but
yes, I was about.
I got excited about something. So there's two things that I've heard right now. One that Noman said, and another that Noreen said that got me particularly excited. One, I do think the issue is behavioral, and it comes twofold. One, in terms of understanding how we that are sitting at the desk and trying to create these products are acting to create new products and services, and that connects me to the conversation of value that Noreen spoke about. How we perceive value may be very different from how, and the minor caveat to what Noreen said, how the ecosystem sees value. So it's not the individual consumer alone, right? We've really got to get to a place where we can watch what's happening with the cash and then start offering alternatives and fail fast. So the second component to what I think is absolutely critical for all the fintech and digital players is to come in with the intent to keep evolving. There's no product that any of, you get the best minds in here on this call in a room to hackathon a solution, it may be perfect for the next 2 hours, but it's really going to be perfect for just about 2 hours until you bring in that digital mindset that you see, and sorry, I'm going to call on my consulting experience before I joined Aleph. And I was working with about 5 of the leading banks in Pakistan, and we were talking to them about product innovation. And my focus was entirely retail. I once asked a very, very senior group of bankers, all group heads, how many product improvements or changes they'd made in the last quarter. And the highest number that I got was not from one of the big 5, but one of the smaller banks. And the number was, we made 14 product changes last quarter. I was like, excellent. Can you tell me about one of them? And I kid you not, I wanted to create a little hole for all of us to sink into. One of them was a pink checkbook so that more women would apply for bank accounts. I swear to you, mind you, not just pink checkbooks, because that wouldn't be a product on its own. It also included pink balloons in the branches and a marketing gimmick around that. But that's what they were doing. And true to my nature, I said, let me go test Aleph on this as well. And I asked them the same question. And I don't remember the exact number, but in 1 quarter, they had taken customer feedback and translated it into 130 different changes that were now available to the customer. 130 in that same 1 quarter that we're speaking of. And that mindset of, I don't have it right, I'm going to keep listening to the customer and keep delivering change, is something that's really missing, and it's going to be needed no matter what solution we take out. And it's got to be ecosystemic. It's got to be thinking about the consumer. It's got to be thinking about the railroads for payments. And Rust is really exciting to look at. But it's got to be thinking about the merchant and how they receive the money and what they do with it and who else they can pay. And when all of this becomes easier, we're going to be in a different place. The one thing that I will add, Sharbana, I don't think Kenya is the same. I don't think India is the same. I don't think China is the same. We're a unique animal. We're going to need to evolve on our own journey. But it's got to be that. I'll pause now.
Yeah, I think
that's great. Yeah.
Just to add, I think it's also about financial literacy in Pakistan. And you can compare that with the number of people who file taxes in Pakistan, for example. Yeah, I mean, it's the same thing. If you bring the ecosystem in a way that, that really adds value to an individual who's, let's say, a farmer sitting in, remote areas and has access to financial services, of course, internet and other stuff, that is the only way to grow. And which is why I think the wallets have been quite successful, because they were being driven by telco operators who had the outreach in those areas. With, fintechs and banks, generally, we don't step outside the 10 large cities, generally. And the population is all outside. So this is probably a more demographic challenge, financial literacy. In the UK, for example, one of the challenger banks, when they started, I remember Monzo, they opened up a Monzo community. If you want, you can check community.monzo.com. And they built a very strong network within the millennials and the working class using that community, where you can actually go in and comment and advise and actually help them build the overall services that they have rolled out in the market. And now today, for example, they have 5 million users within the UK. And so it is about value as well as the financial literacy and the ecosystem.
Yeah. So on that, Shabana, just to obviously first coming to your question, which was what can we do? And I would kind of agree to Noreen. If we would have known, we would have done that by now. I would have taken to the next level. However, yes, if I give the due credit to everyone here and everyone not even present here, I think we have been trying to do a lot of stuff and a lot of stuff out of one very, very substantially beneficial for the entire ecosystem to grow. For example, as you
job in lending, right? Banks like Alif coming into the market with a massive experience of how to make it successful. Obviously, they will be bringing a lot of innovative services into Pakistan. Take the credit away from bigger banks like HBOs of the world or JS Bank or every commercial bank, which has played their important role in at least formalizing the economy to a level that we today have a one-link network which we can simply take advantage of, right? Take it for granted in a nutshell, but technically the ecosystem in Pakistan is much more developed because of individual contributions that all the organizations have made. RAST is another example by the regulator. Obviously, I understand that it is still going through its progression, but that's how the regulator is trying to facilitate. You have bill payment companies aggregators, you have school payment pay companies aggregators. We have a lot of startups working in many different areas. We have plug and play situations today, right? Alif coming into this market without having one link. For example, I'm just giving you an example, right? They were supposed to connect with 35 different banks' ATM switches to get their card accepted. Would have been technically impossible for them to do that. So yes, the ecosystem is there. That's one. However, I think the way we can succeed even better, and obviously Easy Pesa, JazzCash, Zindagi, UPesa, all of us are trying. How we can do it better is on.
Sorry, I'm guessing it's not just me that can't hear Numan at the moment.
Yeah.
Yeah.
Yeah, I think it's internet connection.
Yeah. Okay, so maybe Noman needs to connect back again. But guys, thank you so much for that. I mean, I think, you know, when Noreen is talking about day-to-day requirements to be changed into more digital, being digital savvy, you know, keep evolving, absolutely, and financial literacy, all these points. Noman, are you back?
Yeah, I'm back. I'm extremely
Okay.
sorry.
No,
Yeah,
that's
so I
fine.
was-
Please complete. Yes.
Yeah, so I was just saying, for me, the formula is to create pull in the market. For example, lending is a greater demand in the market, and if someone is working on lending, there will be a pull in the market which will generate customer base. Similarly, we tried multiple models, for example.
Sorry, Numan, we can barely hear you. I think there's
I'm
something
sorry,
wrong.
you can just go off and let me change my internet connection.
So Noman is changing his internet connection. He's asked us to wait.
Okay, so in the meantime, let's use this opportunity to answer a very important question. And I had it for honestly, for Shamsher, coming from Central Asia, seeing the market there. Also, we have a question from Azima on this, and I just wanted to understand, how do you think digital banks can create trust with their customers, with the masses? If you ask somebody right now, they trust, you know, it took a while for them to trust a platform like Easy Pesa. They were, I mean, when we started out back 15 years ago, people could not even fathom how is one retailer going to send money to another retailer. There was so much trust issue, but now it's more or less established. Digital banks, more or less, most banks are evolving slowly and gradually. They're making their own apps. They're making the customer journey very user-friendly, seamless, one touch, one click. But do the masses trust these banks? What is that thing that will actually have them trust them? So yeah, that's one question for you, Shamsher. I think let's hear from you first.
Right. Let's bring on the tough ones now. Okay, you know, I get very excited about Alif here in particular, and I'll tell you why. Alif went from being a microfinance organization and within 6 years being the most trusted bank in Tajikistan, and this is based on their own internal service and the most trusted brand in Tajikistan. And I think it stems in two things that are very important. One that we've spoken extensively about, which is creating value. So unless we're creating value, that it's really not going to happen. So if I'm just a prettier product, it's not actually going to help build trust. I think the second thing is, and we talk about this at Aleph, and it's very important to us, is no fine print. We've seen far too often in the banking industry, and not just in Pakistan, around the world, where the fine print starts breaking loyalty or impacting NPS far more than the simplicity of great products. And I think the simplicity of great products is what we really need to work on. It goes right back to what Noreen said. If we're creating value for everyone involved and being transparent and upfront about it, I think the evolutionary growth is just a natural progression. I do want to talk about one thing, and I'm going to name another player that I happened to be on a panel at a few weeks ago. I was sitting with Umar from SadaPay, and we were sitting at a university. And just as the conversation started, I asked them very quickly, how many of you have a SadaPay account? And in a room of about 120 people, about 40 pulled out their SadaPay cards to show it. I have a photograph of that. That's trust. These are students. Banks don't want them in the door because their accounts are negligible and they don't want them. And SadaPay has them not just trusting them, but boasting that they've got a SadaPay card. They didn't raise their hands. They pulled out their cards and said, here it is, right? And I love that because it says that digital is going to happen. There's generations and generations that are just dying for anything better than, and as Dr. Raza Bakr says, anything better than a visit to the dentist, right?
No, absolutely. That's true. But, I think a lot of, so I'm just, it's a question from the attendants right now. I mean, most of them are asking looking at the business model, digital banks do not make enough money or are just, breaking even. 95% of them globally are struggling with being commercially viable, scaling it up, keeping their head above water. I personally think that's not true because coming from a digital player like EasyPaisa, we made a lot of money. Whether it was, that was probably also because we had a lot of government clients and there was a lot of digital uptake, especially thanks to Benazir Income Support Program. We did make money. But what do you guys think about that? And maybe Noman, you can answer because being in a bank, do you think that this is something which you worry about as the head of a digital bank, that will we be here 10 years from now with what we are doing in terms of, will we be commercially viable?
Maybe I can give a simpler answer, and then Noman,
Please,
because
go
Noman
ahead.
sits in a conventional plus digital bank. In these markets, none of the fintechs have actually made it to profits until they started getting either in a tie-up with marketplaces for lending, or they started offering lending themselves. So without lending, generally, as a principal, banking doesn't make sense because you don't make any money if you're not lending your deposits. And so for example, Monzo, Revolut, and these bigger challenges, they've started becoming profitable because they've started offering overdrafts or products that are more freer for charges because the landscape is very competitive in this market. Probably in Pakistan, Noman can give us an insight.
Yeah, thank you. Thank you for that. I'll just like to add and take, let's go back to the basic actually. What are the banks doing today? Banks are making money, we understand that, right? So specifically to your point, Faraz, how the bank makes money? They collect your deposit, they lend it, all of the other services are coming on top of it. The generation that we are talking to is a bit different. And as Mahmood Shamsher actually referred to the class, I'm really excited to know with the students, and I know how excited they are about digital. They need services first before they get trust you with their deposit. And once you have that deposit, only then you can start lending. That's how the ecosystem works, right? So the ecosystem will just take a bit more of time. And years ago, where the banks came in, started taking, because the bigger problem at that time was keeping cash under your pillow. So they started keeping money with the bank. So they were already cash rich and they started lending. So the cycle for them was A to B. For us, it is B to A and then to C. So that is the problem. And it is not a problem, it is a good problem to have. When you have a customer base, and specifically when we talk about ourselves as digital players, there is a digital journey of lending. We do not have the luxury of identifying a person home address through his mobile phone number, ghar ka number, bijli ka bill. Ye sab hum nahi kar sakte. What we have to do is to find a digital way to do that in a best way. The best thing is, and I'm obviously Noreen is here, these guys are expert in that, is to have the digital footprint. If a customer is coming in first, trying your services, trusting you, and then bringing in a lot of deposit. By the way, what is happening with us at Zindagi? To tell you honestly, we created a lot of use cases, right? Which were never there in 75 years. Pakistan. And while I was listening to Mahmood, I was actually, smiling inside my heart for the first time, listening someone else the stuff that my management and my board says you guys are either crazy or you guys don't understand what you're doing. But we came up with 21 major iterations in less than 8 months of our launch, right? And when I say 21 major iterations, that means at least 3 products per iteration. We created 102 major use cases in less than 8 months. And not only that, opened 71 out of those for the entire industry. So we are partnering as an open banking platform, and we don't want to restrict that to ourselves as well. But all these customers are coming in, trying one services. If they are happy with the one service, only then they jump on to second service. And then obviously deposit mobilization and stuff like lending has started happening. So it will just be a matter of time. This is a stigma attached to digital or neobanks that yes, they don't make money because their principle is to provide you free of cost services when it is about transactions. However, only if you are part of a commercial bank. I make a lot of money as Zindagi just because of the deposit that I mobilize, because at the end of the day, I'm lending that to the government or to someone else. Or that deposit has a rate of return every night I keep it. Plus, I have my digital lending platforms ready and we have recently started one of them and making a lot of money out of that as well. In addition to that, I think there are a lot of green fields which we have not explored. We are making a lot of money out of stocks. We are making a lot of money out of mutual funds investments, which was never there, and on a transaction which is less than 100 rupee transaction. So it's just about creating those use cases, complementing the industry, and collectively making money. All of us will make money, and a lot of money.
Shabana, can
Thank
I
you,
add to
Noman.
that?
Yes, please go on, Noreen.
So I actually would second with what Faraz said. See, it's important to understand the different models of digital banking around the world. If you talk about, the Americas, digital banking was more of a payments-led, a payments-led model. If you talk about Europe, UK and the Europe, that has been more so of an open banking-led model. And now if you talk about areas like, Asia, Pakistan, this region, well, I feel it's going to be more of a lending-led model. Now, we talk about all these, fintech, these digital banks that are still not in profits. And, in digital banking, of course, there are different domains. You talk about payments, you talk about credit, savings, investments. They're different domains. And most of these banks who started with digital banking was primarily on the payment side. And as we're aware, payments is it's a time consumptive and it's a very costly area to start with, and the margins are fairly low. So I think that's one of the major reasons that most of these banks who started off were primarily not in profits. And of course, their customer acquisition costs initially with their marketing budgets were so huge that covering that, but with the focus primarily from the VCs to actually have hyper growth models. The focus is more so on getting more consumers rather than focusing on the bottom line. So I think that's also an important In the entire cycle of digital banking, and I think the evolution of how these companies came about, it's important to understand. Now we do see most of the companies, whether they're banks, fintechs, or not even fintechs, they're focusing on lending. And lending, why? Because lending is actually the core area which actually makes money. Well, banks don't lend, they put their funds in treasury bills, which is amazing for the banks. But that really isn't banking. So I think in terms of how these banks will become profitable, in initial years, it'll be tougher because, for most of the digital banks, we talk about Pakistan, they'll be laying down the infrastructure and the tech ecosystem, to capitalize upon. But I think over the years, if the focus is really on the fundamentals, which has been missing for most part of these years around the world, I think that will really come into play. And also, I think one thing that we need to understand is we don't have to be doing everything ourselves. That's the challenge with most of us. We want to be building every system within, our own entities. If we are to scale efficiently and capital light, we need to engage more partnerships. So that's my take on it.
Thank you, Noreen. That's a very crucial thing. If you can't, that's something that, I was told at the start of my career, if you can't beat them, partner with them. If you can't compete with them, partner with them. So there's no way ahead except for partnerships. At this point, I feel like when we talk about digital banking in Pakistan, we're nearly there in terms of what all of you have said. Says one thing or the other, saying we can do it, there is potential, there is opportunity. And what I see it when I talk to so many different industry players, especially, I mean, we have an API-based model, we have biometric technology, we have cloud computing. We're talking about, RPA, machine intelligence, instant payments. It's all there. All the ingredients to have digital banking, someone or the other is doing it. Maybe one of the reasons why it's not coming together is everybody's working in silos. And that's what, as an open banking platform, we tell our customers and industry players, guys, we need to come together. The data needs to be shared. The payments and how the payments are being made, people should not be hopping between apps to make a payment. If you're using Careem, you should be able to pay through EasyPaisa, HBL, whatever bank account you have while being in that app. And these things are something that we really need to consolidate. That's all what it is. What I think, in my opinion. But one thing I would like to talk about, and that's a question for everybody. I think we are now hearing a lot about banking as a service. While they're still few in number, I think this is a new type of a digital bank, which is starting to make reality. And honestly, a banking as a service for me is a technology company with a banking license or offering those tech-based solutions along with the license that can make anybody's life easier. What do you guys think about BaaS, like banking as a service, in terms of the digital growth of banking that's happening?
So if you allow, I can take lead on that because so what we did in a couple of years ago that we deployed, right? And we came up with the strategy of enabling the ecosystem. And when I said that we did 102 major product iterations and launched new products, launched new services, majority of that was coming from customer. As Mahmood really mentioned, we have to be very cognizant of the fact that the customer has to respond. Out of that, keeping things kind of in a silo where if we have improved something on a platform, that should just remain with Zindagi. What we have done over the past couple of years is that we have launched banking as a service. So you guys might have seen me and our press conference, Careem and our press conference. What we are trying to do is to provide banking as a service to all the fintechs available there, right? Some might graduate to a mile later, but when they do, right? If they want to be in the market, they can simply use my regulatory license, my solutions through a normal open banking API platform, which takes less than 14 days to integrate. You integrate the service you want to and just launch your services independent of the brand issues that we generally have, right? So I just say, this is your banking platform. You want to white label it, do it, right? However, it will have to happen in both ways. So if you are integrating with our solutions will integrate into your. And eventually we want to create a banking as a service platform, which is available for everyone to jump in. So if I created a use case for stocks to be invested on a digital basis, not only accounts to be opened on a digital basis, but buy and sell to happen, I'm more than willing to open it up for everyone. We shouldn't be greedy about having unique use cases. Rather, we should be working on customer experiences to be unique, right? And if we have, it has to open up so that more customers can get facilitated. And we learn from our partners, actually. I can share my experience of last 2 years. Partners coming in locally and internationally have actually improved our solution. They came back to us, told us what is the best way of, giving a user experience against a certain transaction. And while we improved it for them, we improved it for Zindagi customers as well. So it is all about complementing, and I cannot vouch for it better than more than this. I know this is a rare thing in banking sector in Pakistan. Banks do not like to open up much, but JS Bank and Zindagi have been, kind of leading that way to make it happen for the entire ecosystem.
Yeah, just to add to that, Naman, it's also the infrastructure. Of course, there's a lot of investment that goes into tech infrastructure and the payments infrastructure and connectivity with the schemes, and so you better utilization of that. The bank has already invested into it, millions of dollars, and once they open it up for banking as a service, then probably 50-60 fintechs will be able to utilize that. So that's an ROI for the bank as well as for the ecosystem. But if you compare it with UK and Europe, I think the biggest push on banking as a service or biggest success has been the regulatory simplicity. So here, if you tie up with the e-money institute, you can actually become an authorized distributor of the service, and it's under FCA or under ECBA. It's allowed, it's permitted. That helps the fintech actually test the water before getting into a full regulatory compliance aspect, which could run for a year or so. So I think that actually helps build the ecosystem quite a bit if there is regulatory support on distribution side. And sorry, banking as a service is quite successful in UK and Europe. The cost to the cost to sign up with a banking as a service provider is much lower, and you can actually test your use cases and go live within like 12 to 16 weeks in some of the markets.
That's the real actually use case. 1, zero capex or almost negligible capex of integrating on a 2, pay as you grow model. 3, utilizing the infrastructure, be it regulatory, operational, human resource, tech infrastructure of a full-fledged bank, right? And running your own independent white label brand. The problem, and I have been part of this financial services industry of Pakistan since, I don't know, last 15 years. My entire career has been through this. This brand, I call it a brand ego. A brand, I'm wants to build our brands, but in that fight of building our brand, we should not be working in one way or other of killing other brands. We are a country of 220 million population. No one company, one brand, or even 100 companies together could be able to address the needs of the entire nation. As Noreen was mentioning, I think if someone wants to, for example, do lending, why everyone wants to build the lending module in-house or try, kind of go and partner 10 different times, right? Just go out. If you have an example, partner with them, provide them with your financial books, make sure that you both are earning rather than you independently failing to earn. Someone has an experience, use them, utilize them, open up yourself for the industry so that they open up avenues for you. That's extremely important. And as a commercial bank backing Zindagi, I think that is the biggest advantage that I have. And that's exactly what we are trying to do in the market. Open up ourselves for all the, not to be self-centered.
May I play the devil's advocate here, please?
Please go ahead,
See,
Noreen.
and I'm actually playing the devil's advocate because I do agree with what Faraz and Aman have said. See, I think, we've seen all over the world companies like, Rails Bank, Mark Petra. There's so many of them who really succeeded having banking as, service models. But I think it's also important to understand that those regions are much more developed in their ecosystems and the environment for digital banking. Pakistan we barely started. Now, I think as individual entities, one thing that deters us from these banking and service partnerships is, number one, losing control of the journey. Because many times you can't customize a lot of things that you would otherwise want to maybe embed into the products yourself. And the other one is, of course, the unit economics. Many times, while we do understand that setting up your own tech is expensive, the infrastructure is expensive, but when it comes to individual transactions, and you have to part with funds on every transaction, I think that mindset also deters a lot of companies from actually going into adopting banking as a service solutions. And I suppose now with the likes of the digital banking regime starting in Pakistan, we will see many more international players coming into Pakistan and them being adopted here, which till now, we're just beginning to look into Pakistan. So I think we will see that change coming in. And I think we'll see that change coming in the mindsets of entities and founders as well. But I think that's, you talk about me, I think that's been one of the reasons why, we have actually deterred from adopting other technologies. And maybe because that solution wasn't really available the way we wanted it to for the Pakistan market. So I think that's also one of the reasons.
Yeah, Nori, spot on. Actually, there were two problems. One, the solution as you wanted was not exactly available in the market. Two, if you wanted to customize something, being a bigger bank on the other side, they will always force you to comply with whatever APIs they have. Principally, going back to the tech stuff, the issue is that they have developed, I don't know, 28 APIs out of 70 years of their operations, right? They don't want to change any single API for any partner, be it anyone, right? You go back to the basic theme of international remittance integrations that all the banks have done. They all have a standard set of international remittance APIs. For a longer period of time, the banks have been uploading an Excel file. The partners have been uploading an Excel file of international across the world and transferring those funds into Pakistan through an Excel file uploader, because no bank was obviously ready to change their APIs. That has significantly changed. And that's exactly what is required. So as we say, we have to understand our customers as a bank, as a commercial bank. What we understand, obviously, the mass customer that we have, Gen Z and millennials, is a separate thing. But people who are trying to serve those customers through our reels, we have to understand them as well. That's why we have deployed Open API platform of Google, which allows us to change split of a second, whatever customization you need. And then the tech is, kind of smart enough to support new use cases and eventually help us using those use cases as well. But yes, you are exactly right that maybe a year ago, no one was ready to facilitate that. Two, today, what I have figured out in my experience in the last 2 years is we shouldn't be forcing people to remain on banking as a service. What I have seen in my past experiences, that the bigger organizations kind of force the smaller organization to get into an exclusive arrangement. If you want our deals, okay, get into an arrangement of 5 years, 10 years, whatever it is. What we want to facilitate the industry with is, for example, a new fintech is coming in from England, let's say, right? And they apply for an EMI. They can always apply for an EMI, which is maybe a 6 months to a year. EMI, once they get digital bank, they can just take it over.
So we lost you through a little bit of that.
No problem. I was just saying that some of the fintech coming in, right? They have to apply. For example, they apply for EMI or a digital bank. They will need 6 months to 2 years of time to get into the market. Obviously, regulatory requirements and everything takes time. Meanwhile, they can just test their services using us as a partner to banking as a services on non-exclusive. The day they get their EMI license, the day they get digital banking license, or whatever a commercial, they can just migrate to their own license. We will provide them a platform. We do provide them a platform for them to come in, test their services, and it is nothing new. We just learned it from UK actually. So Faraz is here. He can tell you this is the best model that has worked there. A lot of people jump in with a lot of expertise, And the least benefit they give out to the economy or the ecosystem is, and that's what is exactly happening with us. A lot of people are coming in and helping us improve our solution.
So I wanted to jump in with something very quickly. And Noreen, you started by playing the devil's advocate and then positioned yourself very diplomatically briefly after that. But here's something that I experienced within retail banking as a consultant. Banks have a singular KPI. What is the cost of deposit? When it comes down to what's happening on the ground, all they care about is how big is the deposit and how economically can I get it, and can I get it in a current account? And the reality that you spoke of is, if there's a bank with ₹1 trillion book at a cost of funds around 2% that can currently lend to the state at 15%, why in their right mind would anyone there actually want to contribute to the economic engine in any way? That mindset has not existed. I mean, consumer credit, practically non-existent. SME credit, certainly non-existent. Agri credit, well, it exists because the regulator says it has to exist, otherwise nobody would touch it with a 10-foot pole. And that too backed by gold. Otherwise, it practically doesn't exist. I mean, I think there's a little bit of innovation taking place in a couple of big banks. But when you speak to their retail heads, they'll tell you, yeah, that's a nice pilot to have because, you know, and so is leading it and it's doing interesting things, but it's for our annual reports more than it is as a business line. And I think that reality is really hard to digest as someone that wants to see money flow to SMEs, to merchants, to everyone contributing to your FMCGs or to your fashion retail. They need money. They can't get it. We're killing ourselves. As in, from a purely economic engine perspective, the capital that is required does not exist in this market. It is informal borrowing or it's extremely high cost borrowing. That's not going to help us. And I think that's a shift that we have to make. And it will be digital banks. And I think it'll be digital banks because they're coming in to say, look, I really don't want to be taking micro savings and then lending to the state. I hope they sort of can stick to that. The business model screams lend to the state. It's risk-free, it's good money, but I hope somebody comes out and disrupts it.
So I think at this point in time, I'll just steer the conversation to something very important for Pakistani economy and what we're dealing with on an everyday basis. And Muzammil Iftikhar has asked a question in the Q&As. While we're talking about digital experience, financial inclusion, digital banking, unbanked banking, how can we make the cash go away? How in Sadr, as he said, Bolton Market, Zena markets, heavily concentrated in cash transaction. You would rather have cash under your pillow than put it in a bank because, you know, cash is king. I know so many people in my own family who still don't have a credit card, I mean, older ones, and they prefer to pay cash because they feel it's hassle-free. For them, digital banking is a no-no. How do you, all of you, what do you propose that, how to do away with cash on delivery, with cash? This is something that's, again, there for so many years. Everybody's tackling with the same.
Just a quick comment from my side. I think it's again it's a behavioral aspect, but when you talk about cash dealings in UK and Europe, people are quite reluctant and hesitant even on deposits in cash to your bank account because people start asking a lot of questions here. And you don't want to get flagged that, you know, this guy does a lot of cash dealings. So it's a mindset change, also regulatory push. The other thing is, you know, credit score. Credit score is big thing in UK and Europe. So you need to maintain your credit score. You need to know, you know, all your transactions that are happening are not flagged. You know, so that thing in Pakistan, I think, is majorly missing. Nobody cares about credit score. There is none. And cash dealing is welcomed, generally in the business space. So I think these two areas we need to work on.
Any of the other panelists want to contribute to how do we go?
I just want to say that as soon as you asked the question, I love the excitement that happened among the four panelists. Like everyone's ready to go. We all have a view about this that's really nice and strong. I have a two-part response to this. One is, and I know this will, I may get beaten up for saying this, and I will add a caveat. This is a purely gut feel. This is not driven in data, but I think we've gone about it slightly incorrectly, and we've gone about it geographically. What I mean by that is whoever's sitting there and creating products for a market in mind has looked at the market of, say, Lahore, for Zainab market or Sadr or whatever it is. Cash does not flow geographically. Cash flows across a value chain. And I think one of the things that we really need to study very carefully is the movements of money across value chains to figure out where value can be created, where efficiencies can be created. If you look at some of the wallets that have gone and done customer acquisition, there's examples of things like very high cost customer acquisition of food festivals and the likes of things like that. Let me go buy customers. That's all well and good, but you're buying customers that will not use the wallet again or will use it sparingly. While if you actually create value across a value chain, for example, if we watch the movement of edible oil all the way, and the movement of money of edible oil all the way from where it is generated at the Kirana store upwards through to the importer, there may be spaces where value can be created. And it could be in efficiencies, it could be in movement, it could be in security of how much money is moving. I think that will offer more interesting use cases than geographies. So that's one thing I want to add. I think the second reality is we've learned that people avoid taxes in Pakistan. So the instant we're documenting, there's everyone screaming that I don't want to be paying more taxes. And the instant you do this, there's 5 people at my door saying this is how much business you've done. And we experience similar things in Tajikistan as well. There is a lot to be said though when we create the right partnerships and the right products about what we can do to create incremental revenue for the cashless line of business. And that's incremental. Say, carry on doing what you're doing. I'm not here to fix that. I'm here to say you now have access to Noman and Faraz and Noreen and Mahmood and Sherbano, who would never have come to you because of your cash economy. And now this access is additional revenue. Pay the taxes on this. What do you care? And I think that might potentially create interesting space.
Absolutely. Thank you, Shamsher. That's a really good answer to the cashless economy. I think also some of the questions that are coming in, one of them is about financial literacy, and people are asking, what about financial literacy? I think that's probably the most important missing link that we have in Pakistan. Whoever we go to, whoever fintech we ask, they'd say if the customer knew how this would have worked, it would have been a success. You would need to give them training. Let's have, training module sessions in SIN so that they know how to use it. And that is the reason why I think with a lot of new banks who are coming into digital banking, they're partnering or they're getting more and more retailers. So that retailer channel, because these people still need touch locations. People still need to see a physical person standing there, talking to them, telling them about a product or a service, because they feel on their own, they might not be able to do it. But that has to eventually be phased off. And I think that's a very important discussion for another day, how we can let go of these 400,000-500,000 retailers. And, eliminating middlemen has always helped. There are certain advantages to it. There's a lot of profit that can be made by the two parties. I mean, a lot of customers, when they go right now to get cash over the transaction or over the counter, they have to pay a certain money. If it comes to their CNIC, if it comes to their mobile wallet, they need to cash out. There's 80% of that commission is being taken by a retailer, but that is what's the need of the market right now. To educate these customers. Maybe 10 years from now, we will not see so much retail footprint. Most of them hopefully would now be using the apps and know how to use it. And get to use that money between those apps, whether it's food delivery, whether it's ride hailing, whether it's e-commerce. They can actually keep that money in that system, digitally use it, and we'll have more infrastructure and a better ecosystem to support that. So that's the answer for the financial literacy, the ones who are asking that question. I think one very important thing that we have not touched upon so far is, what do you think about the regulator in Pakistan in making things easier or difficult for digital banking? How do you think, like when we talk about, so, Faraz is in the UK, and when I look at the UK and I look at the regulations for open banking, which is now regulated, it's doing well. And being in an open banking platform, I keep on looking to Europe for a lot of learnings. And when we come to Pakistan, obviously this is a new topic, but for digital banking, it's not. It's been on the go for a couple of years. So your 2 cents on how the regulators are responding to the wave of digital banking, whether they should do more. I mean, we know, I didn't say whether they should do less, because they should not, definitely. There's so much more to be done. But what is your take on that?
To ask that question while
Yes.
we are hanging in between the approval of digital banking
Yeah, let's be diplomatic here as well. Let's not bear everything, but yeah.
Yeah, I think, see, local dynamics play a very vital and I have been very vocal about it since, I don't know, last five years, trying to make people understand. Now, why there is a clear intention of regulator to support any means to digitize the economy, to help the ecosystem grow. You talk about EMI licenses, you talk about the experiment of doing branchless banking license, which really worked well for us. Today, if we thinking of going into the journey of digital banking, is because we are already through the branchless banking experience, right? While it is about banking license, or while it is about pushing post, creating a amendment for banks to kind of have a chief digital officer, it is then on the organization how seriously it takes. Bank regulator has been very aggressive to kind of support. However, as a country, we are in a very difficult situation. Push for digitization. On the other side, we were on the FATF gray list as well. Digitization asks for risks, right? And in a country where we are blessed to have central bodies which have the data of the customers, we also have problems of fraudulent usage of that data as well, right? So we know that there are serious problems with the on the basic level accounts at least, but there are, or abuses of one's data. So it is not very easy when you look at from the regulatory perspective as to how to facilitate a market becoming digital overnight. It is not a very easy task, but however, they are very open to try. And that is what gives us the liberty and puts us under the responsibility of making sure that the innovations we are bringing in are secure, long-term, and are serving the interest of the country in addition to serving the of one particular organization. So yes, the journey has been not as aggressive as possible, but I'm sure that within the given situation, it has been extremely good.
So what is your take? Yeah, please go on.
No, go ahead. Go ahead. It's fine.
I was just asking Shamsher, Noreen, what is your take? I mean, just one line, how do you feel the regulators should respond to digital banking?
My take is, I think the regulator is definitely trying to bring in the right interventions. But of course, this is going to be a learning process for them as well, because this is, really the first wave of digital banking licenses that they will be giving. So definitely the intent is there. And to be very honest, I think if you talk about, well, the State Bank, which is directly dealing with the digital banking licenses right now, I think that they're a very stable regulator, and probably one of the, maybe the better regulators in this region. But of course, I think there will be a lot of learning that will come from the execution. Sorry, guys, I dropped out.
Yeah, we lost you first. Yeah.
So I was
No
saying, yeah, I think with this new wave of the digital banks coming in, I think a lot will come from how they really execute as well, and maybe the State Bank will then might have to improvise accordingly. But I think one important area that I would want to touch upon is open banking. I think the State Bank has now, jumped in to take lead on it and push for it, because if it had been left to the practitioners alone, I don't think it would have ever happened. So I think some of these initiatives have to be pushed by the regulator itself if they want things to happen, because I think evolution takes its time. So unless that push doesn't happen by the regulators themselves, things will probably take longer than we would like them to.
So Noreen,
Yeah.
before you, I know you have to leave early. I'm sorry. There's a question for you from the audience, and they're saying, what is the collateral against the micro lending? What are the challenges? Anything you can think of to make it more secured lending, like banks do?
Okay, now that's a tough one, because well, TASE actually did completely unsecured cash lending, throughout. Why? Because majority of the people that we lent to either did not have collaterals, they do not even have credit histories. But I think what really does matter is how do you really assess that customer? There is going to be risk. Someone has to take that, I think, that leap of faith to serve consumers. But I think there are also different models of lending, and we are now doing that under Zood, where we are providing SME lending, which is inventory financing that is backed by the inventory itself. We're providing, BNPL that is backed by the product itself. But the truth of the matter is that once you actually start serving the masses, while collateral does play a role and it provides recourse to some extent, the first leg, which is identification of someone, being a good creditor or not, that's the most important. And I think that will come only with access to more credible data. And I think open banking and, players coming in to create data repositories on consumers, and as more and more lenders come into play, creating those credit histories is what's going to help. But yeah, I think there are different models. Even in microfinance, gold is one of the most popular, collateral that's used if it's ground level field microfinance. But digital itself, I think there is a lot of money that will be burnt initially by players. A lot of funding is required for it. It's not for the faint-hearted. So yeah, that's my comments on it.
Thank you, Noreen. That's a really good answer, to be honest. A very truthful one as well. That really tells us what to do about it. So to all the panelists, do we have a future without digital? So for example, there's some banks who say we don't need to go digital. There are some actually who are talking about this very openly. We are making so much money with what we're doing right now that we don't need to go digital. Do you think there's a place for non-digital banks in the future?
Until they get their business model gets disrupted. Yeah. They can still survive. So once the government stops paying a lot of money on T-bills, I mean, the business models will start changing. So yeah, disruption is the key.
And by the way, that's not far away as well. Two things. Yeah, one, until the model of easy earning is there, which is taking money out and giving it in treasury bills, which is changing quite fast with the kind of taxation that is there on banks now, up to 51% fast. Two, there'll be lesser number of banks in coming days. So it will be a fight of survival. As Faraz mentioned, maybe there can be use cases like trade, for which few banks may exist. A bank which is like generating 80% of its revenue from trade. might exist for another decade unless the challenger banks come into trade and start digitizing those functions. Retail banks will have this dent earlier than others. Eventually, everyone will have to change accordingly. But by the way, on a brighter side of it, I know numbers before COVID and numbers after COVID of the digital channels of pure commercial traditional banks. The numbers are crazily, they have changed crazily. People have opted for digital channels. People that we assumed are never going to use an ATM card apps very frequently. The way mobile apps were structured in the banks have changed dramatically. They have understood their customers. Though those apps doesn't look good to the Gen Zs and the millennials, but trust me, the customers who the banks have been targeting or the banks have are really appreciating the kind of services that they are offering. For just for an example, it just came to my mind and I like to share it. When we were in a process of bringing in the new app to the bank, one of the biggest challenge that our customers kept on telling us was multiple level of security. Why do you ask every time an OTP when we are making a transaction? So just remove it. We removed it. We said, fine. 99% of the customers come back to us and tell us they don't use it because every time they have to enter two kind of OTPs, right? We removed it. We launched the app. Immediately, once the problem was solved for most of the people, there was another chunk of people jumped in who said, your app is extremely insecure. We don't want to use this app. Can you just permanently close our channel? And we said, why? Because I can transfer funds without an OTP. Now there's a problem. But the intelligent way of handling it was giving control back to the customer. So we gave it back to the customer. Whoever wants to enable SMS OTP, email OTP, FPIN, all of three, two of three, just give it back to them. But banks have intelligently been addressing this kind of challenges, and I'm sure that a lot of banks who are not doing it will either do it or will no more be on the landscape of.
So here's my guess at it, by the way, and in a mature market, by the way, we as a nation have over 45 banks and multiple other unregulated financial institutions. And we've been fighting over the same 20% customer base to the point that the customer now knows how to, it's a commoditized market with 45 players where the customer knows when and how to take the most benefit of it. They know that they're likely to get a better interest rate at the end of December than they are at the beginning of December. So, they'll even park their money without in a current account till they get it. And that's the reality of how painful banking has become. I imagine there is a future where we will continue to have 5, 6, 7 really big banks. And then just as everyone else has spoken about it, the others will start looking for specializations. By virtue of what the customer requires, some of those specialized banks will remain very manual. So if trade does not transition to a paperless environment, it will continue to be a very manual process because if you speak to a branch manager of a bank that does trading, they know who to call at customs, they know who to call at the port authority, they know who needs to be, put legs on to start running and who needs to be given a nice cup of tea, and it's a very manual process. And there will be lines that, and just like Noman said, retail is going to change. I imagine that banks will very quickly start thinking about remote workers and freelancers and creating products and services for them. And they want nothing to do with a manual process. They will have every single aspect of that digital. It is once the bank recognizes that they need to design around the customer that this shift will start happening.
Absolutely. Thank you so much for those thoughts, guys. I think we should be wrapping up. And interesting discussion. I mean, this can go on for days. Honestly, the way there is so much to talk about and there is so much to learn from each other. But I think really the crux of it all is that I've heard through the discussion is making customer-centric products. Yes, absolutely. Having the right awareness, having the ecosystem, and a lot of it can be driven by the regulator. I feel like where a regulatory gets involved, there is always a big transformation. Things that happen in days, happen in years, happen in days, because there's a push from there, which we are looking forward to, because there is a lot been going on, a lot can be done. I would just, like to close it on that thought that what Albert Einstein once said: you can't solve problems with the same thinking that created them. And we need to look at different customers from a different lens, make products, tailored for them, actually. And that's where open banking, open data talks about. The customer's information is given back to them. They get charge of their own information, share it with whoever they want to get products that they want, tailored for them, whatever that is, depending on their own financial standing. So I think digital already has done a lot. In Pakistan, we've seen a lot of products being launched. I feel like where it's business efficiency, where it's increased accuracy, greater agility, even security. In terms of security, we feel that we've done a lot. We don't see massive number of fraud cases that are happening in digital banks, because there's a tight security. People who are heading infrastructures are doing a great job. And I think the future of digital banking is going to keep up sprouting and not show any signs of slowing down at all. And we feel we all are contributing to it one way or the other. I think we'll have a lot to discuss in maybe a few years to see how it goes on. But thank you so much for your time. And if there is anything that any participant wants to discuss even further, somebody wrote about how women are being included in this, and I feel like women are really taking head on. I feel so many of my colleagues, friends who had businesses, they are now taking online payments. It's made life so much easier for them. Whether even it's the masses with Benazir Income Support Program, so many women are coming out, putting their thumb impression and getting the money. We've done a little bit of effectiveness study of what they're doing with that money. A lot of them have started businesses. So digital banking, if it has really benefited women's ambitions and dreams, and we hope it keeps on doing that for women and men. Thank you so much, Faraz, Noman,
Thank you for your time.
Shamsher, and let's, if anybody wants to touch base, we're available on LinkedIn. Please feel free to send in your questions, and we'll love to discuss this further. Thank you so much, Pakistan.
Thank you,
FinTech
Sharbana.
Network. Really, thank you.
Thank you,
Thank you,
Shabano.
guys.
Thank you, Mehmet.
Thank you, Noman.
Faraz.
Take care.
Thank you.
All the best.
Cheers.
Khudafis.
Take care. Assalamu alaikum.
Thank
Yes.
you. Hafiz. Thank you.